It's going to be a lot more challenging to be a condo investor in the Toronto area over the next couple of years. We're going to look at the numbers for one particular investor having a tough time renting their unit. My name is John Pisalis. My team and I help buyers and sellers throughout the Toronto area make better real estate decisions. If you'd like to meet with myself and my team to discuss your own upcoming real estate decision, you can click the link in the show notes below. So it's no surprise that it's becoming a little bit more challenging as an investor. I mean, I've been talking on the show about declining rents. Rents have been trending down since August, largely because of a huge surge in condo completions. We're also seeing condo listings accelerate for sale. Part of that is investors exiting the market. Now, why are they exiting? So we're going to look at one condo completion that just happened recently that kind of really highlights why some of these newly completed buildings are facing a lot of challenges. Now, if we rewind the clock 4 years ago, I wrote an article on our blog talking about why being a pre-construction condo investor back in 2020 could cost you money. And my main argument was that the prices people were paying were just way too high relative to resale prices. And I just wasn't optimistic that the market was going to go in that direction to make those investments worthwhile. But secondly, again, the price people paid, the rents would have to skyrocket for those properties to even come close to some reasonable level of cash flow. And of course, if we fast forward to today, neither of those have happened, which kind of makes those investments look a bit challenged. So, one particular property I spoke with someone about, they bought for, I think it was about 970,000, 700 square foot unit, 712 or something like that, $1,400 a square foot. Probably not worth $1,400 a square foot in today's market in that area. Maybe worth, I don't know, 15%, 20% less than that. So not great in terms of kind of growth. And again, part of that is the fact that condo prices have not really accelerated very much over the past 4 years. Now, when we look at the rent and the cash flow, of course, that is a whole other story. So if we just assume a 25% down payment, 30-year mortgage, the mortgage payment on that property is going to be about $4,000 a month alone. If we add in maintenance fees, property taxes, that pushes up to about $4,800. And the challenge, of course, is that this property can only get maybe about $2,700 a month in rent, which means the investor is short $2,100 a month on their cash flow to cover their mortgage payment that their basically rent doesn't cover. And of course, that's a very tough pill to swallow for most people, having an additional $2,000 a month in sort of expenses kind of going out the door to float this property. And I think this is partly why, of course, we're starting to see an increase in condo listings. Some investors pulling the plug. I had someone ask me, I think it was on our live market update or somewhere recently, like, how long as an investor, how long should I hold on to this negative cash flow property before I pull the plug? And of course, it's very different. I mean, in the past, that wasn't a tough question. A lot of investors were willing to hold on to them because rates were low. A good portion of your mortgage payment was going towards your principal. And that was one big factor. But the other was, of course, prices were increasing. Between, I think, 2015 and 2019, condo prices went up like 60% or something like that. Insane. So, when you have that level of growth, people will swallow $1,000 a month in negative cash flow because they're making so much off the capital gain. But when the capital gain isn't a gain at all, it's actually flat, or there's a fear it may be negative. I mean, it's hard to be out of pocket $1,500 or $2,000 a month. And I think, what we're seeing now is some investors exiting, some just holding on. I think the sentiment in Canada is very bullish still. Real estate, a lot of investors are thinking, well, let's just, once they, rates drop, we're going to go back to prices appreciating 8% per year. And I don't think that's going to happen probably anytime soon, at least not in the next year or two. I'd be quite shocked, to be honest. Again, if rates are in the fours, I don't think that is a market that's going to lead to rapid price growth. We also have, of course, the federal government looking at decreasing Canada's population growth, which will also take some pressure off of rents and off prices. So we have a lot of different factors that are working against kind of being a condo investor. High rates, which are driving up mortgage payments, high rates, which are kind of cooling price growth. We have population growth declining. So it's going to be probably a challenging market. And, and again, traditionally, real estate investments are not lottery tickets. They're they're not always rapidly appreciating. You have to kind of think about how long you want to hold them and work on the numbers, which is why most investors want cash flow neutral properties, because they're in it for the long term. Toronto is a bit unique, where investors are very willing to go deeply cash flow negative because the price growth was so aggressive. So if you take that out of the equation, what are you holding on to a deeply negative cash flow property? And I think that's going to be the big test over the next 12 to 24 months. How long are investors going to hold on? And again, I don't think it's obviously not all investors. Investors have had their properties for 10 plus years, been paying down their mortgage, have tons of equity. I mean, they're not cash flow negative. They just might not see much growth and decide to take their money elsewhere, but they're not in this very deeply negative cash flow situation. As people with newly completed units or people who bought somewhat recently, with 25% down, who are probably going to be feeling the hit of these higher rates, and we'll see how many of them stick around. And I think, again, like I said, if we look at the data, April had the highest number of condos listed for sale for that month, going back for, historically 25 years or so. So again, I think this is a symptom of investors starting to exit the market. So over the next 6 to 12 months, I mean, from my perspective, I think that's going to be a very important signal to look at. How are new listings growing? How are active listings growing? And are we going to see some pressure on pricing if that inventory does build up in the months ahead? If you have any questions, your own thoughts, disagree with me, please post them in the comments below or shoot me an email at askjohn@movesmartly.com.